you're watching the daily edition of Your Trades on ET Now. This is Priyanka Uppal, along with me is Shriyansi. What a start to the week, Shriyansi. At least after 2 weeks of downward bias, at least we have got a positive start, and we've been hovering around 25,000 level for many days now, and Nifty broke that out on the upward side. In fact, market volatility seems to be easing out now. Indices extended their morning gaze and even closed at the highest point of the day. Bank Nifty was a clear standout gainer today. In fact, the heavyweights like HDFC Bank, that did the heavy lifting today. And the couple of IT names such as Wipro, TechM, in fact, all the sectors closed in green today. Top sectoral moves came in from Realty Pack, led by Oberoi Realty, Godrej Property. Then comes the IT Pack, Finance Pack. Bank Nifty was a clear outperformer today, while the broader market was a little on the softer side today. But couple of names from the broader market, you talk about BSC, CDSL, they gained more than 6%. They are on a spree. They are on a tear from many days now, and it's been no stopping to the moves. Tata Chemical, that stock slipped nearly 6%. This is ahead of the earnings, which is slated on October 17. Remember, this is a earnings heavy week. 145 companies to report earnings this week. Nifty earnings, Nifty heavy week it is. HDFC Bank, Infosys, Reliance and HCL Tech to report numbers today. Even Bajaj Auto. So a lot of Nifty earnings are on tap for this whole week. Big cues, DMart, it was quite a setback for DMart. The stock slipped by more than 8%. Weak set of numbers company reported. Management commentary also was weak, and brokerages have cut their target price. Now talk about JP Morgan, Morgan Stanley or even Nuvama. They have all slashed target prices. So bad day for at least DMart. But then all sectors, they closed in green. It seems that you're favoring markets today.
Well, yes, absolutely. It does look like that at this point, right? But you know, when you take a look at what kind of a day we've had, of course, it was a data-heavy day, because when you take a look at the India's wholesale price index data, that is also something that we got today. For the month of September, we saw an uptick coming in, 1.8% uptick on a year-on-year basis. When you take a look at the figure then, and this is primarily due to an increase in the price of food and vegetables. Now, of course, the wholesale inflation measured using the wholesale price index was expected to be largely, it was being penciled in to be around 1.9%, and we did see that 1.8% uptick coming in on a year-on-year basis. So that is the kind of figure that we have on our hands. When you're talking about the WTI, now of course the WTI measures the price of a representative basket of wholesale goods. So that of course is the breakup, and when you take a look at the three groups, you do have primary articles, fuel and power, and manufactured products, making it to that entire build-up of sorts in terms of the grouping then. But in terms of other updates, of course, you do have ahead of Maharashtra Assembly polls, you do have Chief Minister Eknath Shinde announcing a full toll waiver for light motor vehicles at all 5 toll booths entering Mumbai, which will be implemented from tonight as well. Commuters will now be able to use small vehicles without paying tolls from all 5 toll booths entry points into Mumbai: Dahisar, Mulund, Vashi, Airoli, as well as Teenhat Naka. So that's an important update coming in right there as well. And that is also something that we were looking at very closely today. But tell you what, let's also take the conversation just with the market then forward with our guest then. Aamar Singh, Senior Vice President Research at Angel One, joins us right now. Aamar, hi, thank you so much for joining us this evening. Just tell us a little bit about what you're seeing in terms of the key trends that you see, at least based on the trade today in the market.
Yeah, I would say that markets have bounced back today. So that was somewhat expected, that there could be a respite from the sharp selling that we had witnessed earlier. And since Nifty was trading close to a very crucial support zone, which was around 24,700, 800, that was a very strong and crucial support zone, still is. So there was this expectation that there could be a pullback and also short covering could happen. So that's what we are witnessing. And the good part is that what we've seen today is that the advances have significantly outpaced the decline. So there's been a broader, I would say, move up. But for any further up move, Nifty would need to sustain above the 25,200 to 300. That's going to act as an immediate zone of resistance. Because what we need to remember is that though the long-term trend for Nifty is up, but the short-term trend, there is still some sort of selling pressure. And also the markets have, if you see, corrected primarily on one major reason, and that's the Middle East crisis. So that is still not showing any signs of, I would say, decreasing in intensity. Only we are seeing that intensity increase. So how that plays out is something which is the markets are definitely going to keep a close watch on. And based on that, the FII selling also, which happened, and also some concerns that a lot of money would move into China, which is not, which is also seeing some signs of tapering off. So I would say that markets overall still it's the bulls which have an upper hand. Yeah, if Nifty starts sustaining below the 24,700, 800 zone consistently, then we could say that the next leg of or phase of selling we could witness. Otherwise, markets could witness some sort of consolidation, 25,200, 300 on the upside. And also we'll have to watch out, as you rightly said, some of the heavyweights are reporting their quarterly earnings this week. So how they really pan out is something which the markets are eagerly and keeping their fingers crossed on.
Aamar, very nicely summed up. In fact, the way you said that, the fundamentals and the triggers haven't changed really. It's just that maybe a short-term lived movement for Nifty right now, because though it has reclaimed its 50 DMA level, but it's still trading below its 20 DMA level. So what key trades or, the stocks, where is the safety of margin lies? What stocks do you recommend at this point in time?
I would say there are a couple of stocks which I would like to talk about. First is, I would say, from the financial services space, we've seen some very strong moves in the stocks of exchanges like BSE or MCX. CDSL is also one stock which one can keep a close watch on. The stock has delivered strong returns. It has been witnessing some sort of consolidation. But currently, if you look at the stocks from a long-term perspective, intermediate term trend perspective, that continues to remain strong and positive, and the bulls definitely hold sway. Also, what we witnessed is that the volumes have increased significantly over the past few days, and today also has been exceptionally heavy volume today. So sustaining over the current levels is something which is very important. Any consistently sustaining above 1585, 1590 levels, the stock could witness a rally towards 1720, 1725. And today's low, putting a stop below today's low is something one can keep a close watch on. That was around 1480. The second stock to look at is Bombay Dyeing. This is again another stock, if you look at, has been very strong on the charts, on the long term charts, continues to remain very strong. The momentum is also there. However, what we saw on the weekly charts was the stock went in for consolidation between 240 and I would say 230, 240, and on the downside towards 200, 210 levels. Today has been a sharp day, and also that is, it's closed at the highs of the day. Sustaining over the current levels, the stock could rally, could witness a sharp rally towards 264 to 65 levels. So this is one stock one can keep a close watch on. I mean, the stop loss needs to be below the 220 mark. So this is a second stock one can keep a close watch on.
Well, absolutely. Thank you so much, Aamar, for joining us today. So CDSL and Bombay Dyeing make it to Amar's list. But time now to take a look at the technical charts and the trends that we're seeing when it comes to them. Srishti is standing by with that daily dose of technical charts. Srishti, a breakout and breakdown counter on your radar there?
Well, certainly the markets is been giving moves on the both sides. And first up, let's have a look at the breakout stock that we have got for you today, and that is Infosys. I understand that preempting a move just ahead of the earnings is a little tricky, and one should not do that. But look at the chart of Infosys, and that's why we have thought of highlighting just the technical pattern of Infosys, because on the technical front we can see a sort of an inverted head and shoulder formation for Infosys. The stock actually managed to retest its earlier resistance of 1960 rupees, taking a bounce exactly from its 20-day moving average, and hence we thought of highlighting this stock as the breakout stock for today. Moving on to the next counter then, that indeed is a breakdown stock, because Gujarat Gas on the charts, you will see that it's a double top formation for this particular stock, and the stock has been falling all throughout since then. After this particular candle, there was a deal that was announced, you can see that, but after this big move, all the hands actually feels like that they are out of the system now. There was a rejection exactly from its 20-day moving average, as well as if we talk about the build up on the derivative front, there were fresh shots that were seen to be getting added, and the stock is also resisting its earlier support of around 590 odd levels, and that's the breakdown stock that we have highlighted. So two counters, back to you guys.
In fact, all the city gas distribution counter talk about Gujarat Gas, IGL, MGL, they're all in fact trading with the pressure today. Thanks very much, Srishti. And the one that you highlighted, IT, certainly on the move today. In fact, the top gaining stocks were from IT pack only. Moving on, let's get you the word from the wise. Venu Gopal Gare, who's the managing director for Bernstein, he sees overall demand slowdown in the auto sector. He sees sluggish demand for top-end two-wheelers, and he believes CV demand to further moderate in upcoming quarters. Listen in what exactly he said.
So in theory, even if you were to just pull through the views on what is happening on two-wheelers, the top end is still not necessarily great and actually seeing a moderation momentum. And we're not really seeing any major signs of recovery in affordable as yet. So it essentially means almost similar to PVs in terms of thinking, in terms of the economic impact. CVs, just wait and watch what will happen in the next few quarters. Things are going to slow down materially from here. Firstly, CVs anyways had picked off and came closer to flattish numbers. But then what we are hearing on the ground from various fleet operators and others is going to be very bad the next few quarters at least. So you're going to see the momentum moderate even further from here.
All right, and there you go. That was the word coming in from Bernstein's Venu Gopal Gare. But time for a very quick breather on the show. When we come back, we'll see how the derivatives roundup is shaping up like, so don't go anywhere.
Welcome back. You're watching Your Trades, and now a quick check on the derivative side. Of course, the trend has changed for Nifty also, and even for the Bank Nifty. Bank Nifty, there was a short covering trend. For Nifty, now the trend is long built up, and the Nifty has reclaimed its level. It's now trading above 50 DMA. Now, the active calls, there was a mild call buying, but then there was a call buying at the strikes of 25,200 and even 25,300. And now the put writing, the support happens to be at 25,000, and the next immediate level is 24,900. Seems that now we are in for some more gains here if the trend seems to be continuing from here. Shriyansi.
Well, absolutely. That is how the derivatives roundup is shaping up like. But it was Avenue Supermarts that came out with a weak set of Q2 earnings where margins have declined on a year-on-year basis. Let's go across to Gaurav, who's standing by with more details on the earnings fine print, management commentary, as well as what brokerages then had to say about that counter as well.
When we talk about the numbers for Avenue Supermart, this time in this quarter we saw a weak set of numbers, because when we talk about revenue, that increased almost by 14%. It was in line with our expectation. But when we talk about EBITDA, there we saw a growth of around 10% on a YY basis. It was a little below expectation. And when we talk about profitability, there also we saw a growth of around 8%, but that was below street's expectation. Other than that, what we saw is that when we talk about segment composition, that remains stable on a YY basis. But when we talk about the like-for-like revenue growth, that was at 7.4%. And for this quarter, it was at 5.5%, which was a little weak. Other than that, when we talk about this weakness in this quarter, that was largely led by the OPEX expenses. That is where we saw some amount of stress coming up for company. And lastly, when we talk about DMart Ready, which is their online segment, there also we saw a growth of 22%, which was again lower versus what we have seen in FY24. On the back of all these numbers, when we talk about brokerages also, they are being a little bearish on this stock, because we are seeing some kind of downgrades coming up. JP Morgan has now downgraded the rating to neutral and also cut the target price. What they're saying is that the like-for-like moderation is likely to weigh in on the Q2 numbers, and they are also concerned about the quick commerce growth. Other than that, when we talk about Morgan Stanley, they have also downgraded the rating to underweight versus what it was at overweight, while cutting the target price. What they are also saying is that the online and offline stores can coexist, but defenders cannot stay defensive, and at the same time they are very concerned that the 20% growth rate, when we talk about online store penetration is increasing, is a little difficult for DMart. Lastly, Nuvama has also maintained hold rating but cut the target price to 5,040 rupees. So we are seeing a little pessimistic view coming up from brokerages as well. So definitely watching out on how it pans out for investors now that DMart has come up with weak set of numbers in Q2.
Yes, the brokerages also slashed the target price and the stock was hammered badly. Thanks very much, Gaurav, for sharing the earning footprint as well as the management commentary on that. Moving on, we did caught up with Rajesh Rathi, who's the managing director for Sudarshan Chemical, who talk about the integration of the HUBAC that will be completed within 2 years, and the company will focus on growing its EBITDA. Let's listen in. This one was buzzing, especially after a move which came on Friday. 18% stock was up today. I think there was sell-on news today that it got down by 8%.
I think our first phase will be looking at how do we generate a healthy EBITDA and not focus on growth. So from day one, we will start integrating the business into one unified company. We have a very detailed value creation plan, including looking at manufacturing purchase cost synergies, reduction in SG&A, SG&A cost, and we will create a culture of customer centricity and agility and efficiency, which has made Sudarshan very successful. We would require some cash infusion in the business, but not a very large amount.
Well, that was the word coming in from the management of Sudarshan Chemical. The stock was really under pressure in trade as well. Downtick of about 7.8% coming in for that one. But there was a host of stocks that were buzzing away in trade, the likes of Ashoka Buildcon as well as HCC. Gaurav is standing by with that list.
Well, yes, let's begin our list today with Wipro because this company is going to hold its meeting on 17th of October to consider bonus issue. As a result, we saw some uptick in this counter. Next, let's talk about Oberoi Realty because this company is also going to hold its meeting on 16th of October to consider fundraising. Now, let's not forget that company has recently gave an approval for a proposal of enabling raising funds of up to 6,000 crore rupees. As a result, this stock was also in focus today. Next, let's talk about HCC because this company recently won an order worth 1,000 crore rupees from Maharashtra government, and this order is going to get completed in the next 36 months. On the back of the order book, when we also have Ashoka Buildcon, this company also won an order, four orders, and the value of all these 4 orders is going to be somewhere around 4,000 crore rupees, and these orders are going to get executed in the next 36 months. And as a result, we saw some uptick in this counter as well. Next, we have is LT Foods, and there was a negative news flow here. What happened is that this company recently received a notice from Department of Food Safety because the sample collected by the department was found as a substandard product. As a result, we saw some pressure in this counter. And lastly, let's focus on L&T because JP Morgan has now initiated with overweight trading at a target price of 4,600 and 360 rupees. What they're saying is that the company's valuation is very attractive at the moment. We may see fast EPS growth in the next 3 years, and they also believe that this company is well placed when it comes to opportunities from India and Middle East. As a result, we saw some uptick in this counter as well. So definitely watching out on all these counters on the back of the news flow as well as brokerage report that we have received today.
All right, thanks very much, Gaurav, for all those stocks which were buzzing in trade. Well, that's a wrap on this edition of Your Trace. Thanks so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.